everyone, welcome to Friday's free pre-market report. We have a pandemic. Man flu is sweeping through the office at an alarming rate. We are all left snivelling and crying like babies. See, the women don't appreciate it in the office because they aren't quite aware of the medical phenomenon that is man's flu, which means that you take a simple cold and when it comes into the man's body, the pain threshold levels are reduced, so we feel a lot more pain and have and get this very intense manly flu. Like the way I called it manly flu, just to give it a nice little twist, make it sound a bit better. S&P futures, well, we did get that very quickly. The retracement back to the 850 that I spoke about, we tried to take a look at it on a 60-minute chart, which wouldn't have worked out. We had the short from up here, a lot of you guys, the break of this box, which has worked out very nicely. And that since then, here we have up here, we got the retrace to the 8 EMA and the 50 textbook shorting place, and now we're back in the range. I mean, if you haven't shorted, I wouldn't short from here. We've got GDP out today. Expectations are quite high, so we possibly could be set up for disappointment here today. If GDP figures are disappointing, I think we'll see a substantial sell-off in the S&Ps. But I wouldn't be sort of trying to preempt that. Let the numbers come out today in the US, and then let's go from there. We've had a low here of about 70, was it? Yeah, 70 and a half. We've got this spike low here that's sort of looking quite attractive at 62 and a half. Well, that wasn't really what I wanted to put there. Which is back from December. Just there. Oh God, sniffling weakling. That's me, by the way. So yeah, that's open, but I mean, you're going to trade that at that point. No, I think let's just get these figures out of the way. The close of this week is going to be extremely important. They look like they're on the brink here of moving again lower, the S&Ps. Now, for those of you who have the short position with us from 11.23 from the break up here, we'll be putting our stop just above up here above the moving averages. So let's get a level would be probably pretty useful, wouldn't it? So we're looking at about, no, I don't want to be 11.010. We've got the 50 at 11.04. So about 11.06. We will put the stop there. Now, you don't have to put the hard stop in. It's a preference, if you're thinking, well, I want to lock in these profits and don't give them back, then put the hard stop. I'm not going to put a hard stop. I'm just going to wait until we get a couple of closes above this level. The reason being, we took it as a bit of a shorter term trade. We're nicely in the money. We've got some profits. I just want to make sure that towards the end of the week I don't get caught up in any GDP, funky trading, and make sure we can try and hold this and try and see if we can write it down to the 200. And certainly that level could be in play if we take out this 1062 low that we had from back in December, that sort of spike low there. So I appreciate it's not really giving you a lot of information about how to trade this. I just would sit on the sidelines until we get GDP figures out of the way, because unless you're very experienced as a trader, and even if you are, it can get pretty choppy, or just really move violently and just take traders out like a tidal wave. So I just sit on the side for that one, but my sort of thoughts are we are certainly heading low unless we get some very, very good GDP figures. I'm only concerned if their expectations are very high at 4.5–5%, which could be setting us up for disappointment, but certainly not playing them figures. Let's go and take a look at crude oil. Excuse me, it's just something that we discussed in the members video yesterday in depth. We're coming back to sort of this trend line around about the $73 mark, around about there. And then what we did yesterday, I'm not taking this trade, but what we did yesterday, we drilled it down to a 60-minute chart, and excuse me, let me just back a bit here. Where are we? We looked yesterday at this level here, which is up at where are we? No, here 75.41. Let me just get a horizontal line on there for you. So this would sort of be the highs of the week. Where are we, 25th? Well, this would be the level we're looking at. Oh God, I'm absolutely all over the place. This man flu is eating me alive. So it's 75, 37, 75, 40-ish, that mark. How we play, what we're really looking to play here is we're okay here. Our size bullish enough over 50, but as you can see, wedged below the 50-day EMA. Let me just draw that to your attention. I know some of you guys are quite new to the room. So here, this sort of thick blue line here that I'm highlighting, making it yellow, but it is blue, is the 50-hour exponential moving average on a 60-minute chart. So sort of really what you're looking for, your first heads up is going to be a move above this, which is going to be around about $74 plus. Move through there, then you're looking to take out these highs at 75.37 and really just push through the 200 on the 60-minute chart. If you break through there, then and get a candle close above there, in decent enough place to get long. Going back to the daily chart on crude, purely technical trade. I mean, you know, we had a pretty bullish figures actually this week so far for inventories after extremely bearish last week, and of course we got this sell-off up at this resistance level. So, you know, all these things into play. It's a decent enough shot to take a long crude from here on a purely technical basis. But as I say, use the parameters set out on a 60-minute chart. Okay, everyone, that wraps up today's free pre-market report. Have a great weekend. Look forward to speaking with you again next week if we're still here. Of course, we've got through our man's flu. Till then, happy trading.